investors are becoming more cautious about narrow momentum-driven themes. Gold ETFs stood out definitely, with inflows jumping sharply to 11,646 crores, and investors sought hedges against global uncertainty, geopolitical and currency volatility as well. Now, multi-asset funds performed well, benefiting from commodity outperformance, reinforcing, the case for diversification-led investing. Talking about passive and structural flows, ETF inflows rose to almost 13,199 crores, reflecting the steady rise of passive investing in India. Let's not forget the new fund offers. The NFOs attracted over 4,000 crores, showing that investors' interest in new strategies remain intact, at least for December. The biggest positive, SIPs, perhaps the most encouraging signal, came from systematic investment plans. Now, SIP inflows hit a record high of 31,002 crores, up from 29,445 crores in November. Now, this confirms that retail investors are staying disciplined, undeterred by short-term market fluctuation. The financialization of household savings continues to strengthen, marking a long-term positive for Indian markets. Now, what's the bottom line? Bottom line is December's AMFI data tells us this is not a risk-off market, but a more discerning one. Investors are staying committed to SIP, seeking diversification via gold and multi-asset funds, preferring flexibility over aggressive thematic bets. Now, this reflects a maturing investor mindset, focused less on momentum and more on asset allocation and long-term wealth creation. And equity inflows moderated in December. That is a sign also of how cautious and stable investors are. But then let's decode all of this via an expert lens. We have market experts Sunil Subramaniam and Aparna Shankar, CIO equity of the Wealth Company. Hi, evening, and welcome both of you. And Sunil sir, I'll come to you first, because although equity inflows, saw moderation in December, do you see this as a valuation fatigue or just a temporary pause? But, look at the SIP numbers. They are really rallying, and we have crossed 30,000 now.
Yes, and you, I think, summarized it well, Kavita. And what I'd like to point out here is a little bit of more depth in the detail. That is, we saw a 1,500 crore drop in the net flows, but the composition of it was a 4,500 crore increase in gross flows, but a 6,000 crore increase in redemption. That's why the net 1,500 drop. So where I want to point out is that gross purchases have gone up month on month across categories except in focused. But redemptions have gone up, which means people who had put their money 3 years earlier, 5 years earlier, they saw an opportunity to book profits. So, but fresh interest in terms of investing remains strong. And that's where your SIP number comes and shows this very strongly, because you're seeing that a sharp increase, I think, from about 29,000 odd crores to 31, it's about 1,500 crore SIP monthly increase. It's, I think, a very good signal. So I think investing interest remains. Profit booking happens parallelly, and which is a very healthy sign, because only when people take money off the equity markets do they realize the value. Looking at a paper NAV growth and making yourself happy, and tomorrow in a market correction you become unhappy, I'm very happy to see that actually people are booking profits. And if they're using it for some other purposes in their life, like going on a holiday, buying a car, well and good. That's the way the equity markets are delivering on the goals that they have set, and they're enabling them to achieve those. So I think it's been a very healthy month, indicating both healthy profit booking and indications of fresh interest. And you mentioned asset allocation. That's the key, because people have been seeing that large caps have tended to perform better right through the year. At the end of the year, you saw a double-digit return from the large cap index, but you saw a negative in the small cap. So people have been smartly reallocating, and that's why you saw 2,000 crores of net flows increase in the flexi cap category. Indicates that distributors have been advising their customers on two things. One is to put their money into large cap oriented, given the nature of geopolitical volatility, FIs are pulling out and the local valuations are high. And second, that stick to your SIP. That's why the SIP numbers are going. For all you know, some of the people, instead of putting lump sum, might have staggered there into the form of SIPs. So I think it's a very, very healthy indication for the times to come. And I'm sure the SIP number is going to grow from strength to strength through 2026.
Definitely. Aparna, with flexi caps funds leading inflows, are investors effectively outsourcing asset allocation decisions to fund managers? Can we say that?
Yes, and that's as Sunil sir mentioned, it's a really a healthy sign, and it is also a credit to how the distributors or the advisors are advising the retail investors. So I mean, the kind of, it's a tax efficient way also. So if a investor tries to do all this kind of a different asset allocation strategies at his own, or do it yourself kind of a way, it is not very tax efficient, because at every entry and I mean every exit or every profit booking there will be a tax incidence, which is the beauty of investing through mutual fund, that this kind of tax efficiency is available when you are investing through mutual fund. That is one thing. Another thing is that even the investors are understanding that I mean, you should go to a doctor when you are not well. That is the way you should go to a fund manager or a mutual fund scheme when you want to really help yourself to create wealth and preserve the wealth. So I think that is the purpose
Sure.
what a retail investor is looking at, and that
Right.
is what is being followed. And
Right.
that's a healthy, really good sign. There is lot to be done. There is a lot of scope to for higher and better financial literacy. But it is a good start to see that these decisions are not influenced by the sentiments, but by the goals which you are setting in at the start of the journey. And if you are trying to redeem and invest, I mean, use that money to satisfy some of your goals, like Sunil sir said, buying a car or going on a holiday, it's really a good
So,
sign.
so goal-based investing, that's the key, and this is a very important message that investors are understanding. But then, Sunil sir, on mid-cap and small caps, inflows remain strong in absolute terms. But are investors underestimating valuation risk in this segment? How do you look at it?
So I think that if you look at the historical performance, after a year or two of underperformance, mid and small cap outperform. Number
Right,
one.
right.
Number two, when the domestic economy goes through a slowdown, they suffer. But domestic economy recovers, they do better than large caps. So I think given the fact that the government did a lot of incentives last year through income tax, through GST cuts, and through RBI rate cuts, the full effect of that will be felt this year. So I think that I don't think investors are underestimating. They are continuing to believe Bharat pe bharosa rakna. That is, they are continuing to believe in the faith that, and if you see the composition of the SIP, more than 55 to 60% comes in mid and small cap funds. So, as far as their assessment is concerned, put your staggered money of SIPs into mid and small cap, put your lump sum money into large cap oriented. I think it's a very sensible strategy to way to approach the valuation curve.
Right.
And
Aparna,
to add to
yeah,
what Sunil
sure,
sir is saying is
sure.
that there is, kind of a large breadth for, a small cap universe. I mean, anything beyond 250 stocks is all small cap. And there are almost 5,500 stocks which are listed. That means you are talking about 5,250 stocks which are available for investment in a small cap. And if you want to select and, be very selective about it also, and if you are able to identify those one on a 1 or 2% of all these 5,500 5,250 stocks, your job is well done.
All right. Let's also talk about multi-asset allocation funds, Sunil sir, and also, the gold ETF. The gold ETF inflow surge, the investors hedging risk, or according to you, they are chasing recent performance. And also, do multi-asset funds make more sense now than pure equity funds given global uncertainty and commodity cycles? And this is where the investor trend is also going, Sunil sir.
So I would say first part of your question to answer, yes, investors do tend to chase past returns. That's an inherent individual you must investor behavior, whether it's in India or in the US, because gold has been rising internationally, also because HNIs have been putting in gold ETFs internationally. So it's not only an Indian phenomenon, and I think it's very natural because people feel that they want to be part of a growth story, and if a gold silver are a growth story, they want to be part. So I think that is there definitely undoubtedly. But the multi-asset allocation fund you mentioned, whether it's a better asset class than equity asset class, I would say it's based on your risk appetite. See, what happens is gold and silver are generally safety haven assets. When there is trouble, world war, those kind of things, they tend to go up. This time, the tariff war and the de-dollarization, these are the two things which are giving a signal to that. Now, hence, I would say the other way. I would say that multi-asset allocation funds should be a part of your portfolio regardless of your risk appetite today, because gold and silver are no longer purely only safety assets, but they are also part of a de-dollarization move. So to that extent, a high risk investor may take a lesser share of multi-asset, but a moderate investor should have a higher set of multi-asset allocation funds, because gold and silver play a dual role of not only minimizing the volatility because they have a low correlation with equities, but they're also the new age phenomenon because of this. Like I say, I keep repeating the word de-dollarization. Gold is the only alternative currency which everybody has confidence in, including the central bankers. So I think that it's a very smart decision to put money into gold. Obviously, the kind of returns that gold and silver gave last year, to expect that to repeat year on year is not correct, but a healthy double-digit growth can be expected, and hence multi-asset allocation funds cannot substitute equity funds, but must be a part of every equity investor's portfolio as a natural hedge against the equities. So I think the proportion just varies according to the risk appetite of the customer.
Absolutely, absolutely. Aparna, just one last question. How should first-time investors now interpret market volatility while continuing SIPs?
There are, kind of two ways to look at it. One is that when you are starting, and that means you are starting young, and you have whatever said and done, you might have a higher risk appetite. I mean, you have a long way of your growth or maybe earning potential. You have a long way for that, and then you can start investing into little riskier kind of assets. That is one way of looking at it. Second way of looking at it is that since you are starting, this is going to be a new territory for you, and you want to taste the waters first. Then you start with a lower risk appetite or maybe measured risk appetite, and start with a multi-asset or balance advantage or flexi cap kind of a funds, where the risk is diversified across different. One in multi-asset is diversified across multiple asset classes. In flexi cap, it is diversified across multiple different market caps, and in balance advantage, it is diversified across equity and debt. So I think this will be the three beautiful products when you start your journey with a measured risk appetite. I think either ways, it all depends upon a person's kind of behavioral aspects and in the sentiments of what are the surrounding. And I think that any advisor would be a better take an advice from a mutual fund advisor who will know much better way of suggesting investment allocations for you.
Absolutely. But in a nutshell, definitely the retail investors and the continuing SIP and record high number of SIP just proves one thing, that, investors have understood the concept of participating in the markets in small installments. And yes, mutual funds definitely it's the right way and the right approach that they have understood. Thank you so much, both of you, for being on the panel today and helping our viewers understand these AMFI numbers. And on that note, it's time for a short break on the Money Show as well. But then we'll be right back, and post that we'll be taking your portfolio queries.
In association with SBI, the banker to every Indian truly.
वैसे रिस्क प्रोफाइल के हिसाब से मुझे इक्विटी म्यूचुअल फंड्स में इन्वेस्ट करना चाहिए, पर स्मॉल मिड लार्ज इतने सारे सेक्टर्स समझ नहीं आ रहे हैं इन्वेस्ट कहाँ करूँ।
मल्टी कैप फंड, इनकी मदद से स्मॉल मिड लार्ज तीनों मार्केट कैप्स में एक साथ आसानी से इन्वेस्ट कर सकते हो। अगर एक फंड से मल्टीपल सेगमेंट्स और सेक्टर्स में आसानी से इन्वेस्ट करना है तो तुम्हारे लिए मल्टी कैप में निवेश हुआ
सोचा समझा निवेश।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना से संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।